Hello, and welcome back to Coin Lady channel. Today we'll discuss recent events involving the SEC and a strange issue involving Coinbase. If you want to know when we upload new videos, make sure you subscribe and enable notifications. Make sure to hit the like button and leave a comment below. Surprisingly, this week has seen a surge of almost 30% in Bitcoin and Coinbase share prices. This increase is due to the fact that many large institutions have resubmitted their spot Bitcoin ETF applications. Coinbase coin has undergone an astounding 92% gain since the SEC has targeted actions, and the graphic given by BC Backer reveals this. Let's dig deeper into this odd graphic, though, because there may be something nefarious happening behind the scenes at Coinbase. Despite the positive trend, this development nonetheless caught everyone off guard. Coinbase personnel, including CEO Brian Armstrong, have been selling off large sums of shares and cryptocurrency, a seemingly unprecedented move. We aren't making this up, people, take it at its value. While you, the investor, are buying shares of Coinbase, the company's management are selling. Regardless of how high prices go, they are gradually selling off their holdings. But here's the catch: if Coinbase is a stable company with bright prospects, then why are so many of its top executives selling their shares? Brian Armstrong is only one example. My guess is that they are quietly selling off their stock holdings before the impending crash. They risk suspicion and unwelcome SEC attention if they sell all their shares just before the collapse. After all, it's quite difficult to time the market correctly. As a result, they are proceeding cautiously in order to liquidate all of their stock holdings before the market crash. This allows them to avoid detection and punishment. Similar events in 2001, when some people began shorting stocks and removing gold bars, remind me of what we're going through now. They claim to have official justifications for their actions. Some say it's all part of a predetermined strategy, while others dispute it. The fact that Coinbase creator, Brian Armstrong, has been deleting several tweets adds a further layer of intrigue to the story. Keep your eyes peeled, something seems odd with Brian Armstrong and Coinbase. Let's talk about the validity of Coinbase now. Keep in mind that they are not on the side of regular investors. BlackRock's backing of the cryptocurrency market is a huge institutional endorsement. Once they have made as much money as possible off of regular investors' money and the inevitable crash has taken place, they will start pumping the market up again. We must be ready for any outcome, but I think it's safe to say that the time of reckoning is near. The role of the SEC in this is crucial. Speaking of the SEC, a major event occurred today, not long after we finished talking about the library case. Following a favorable ruling by a federal district court, the Securities and Exchange Commission, SEC, is seeking a civil penalty of $111,614 and an injunction prohibiting library from conducting any further unregistered offerings of securities. Library has filed a motion to limit the SEC remedies. Concerns have been raised concerning the implications of this for the ongoing litigation between Ripple and the SEC. Considering that the library was hit with a relatively minor punishment but still went under, it's clear that the SEC's actions ran counter to their stated purpose of safeguarding small investors. Looking at library's recent performance, which has been in a downward spiral ever since the case against them surfaced, it would appear that the day of reckoning has arrived. As of right now, it has decreased by somewhere about 90%. Given this, one must wonder, will a similar path be taken by the Ripple case? Honestly, I pray not. The Ripple case should be resolved as soon as possible, preferably within the next 2 months. If it lasts for years, however, it will coincide with a collapse in the market. Let's hold out hope that things work out well. While the SEC's questionable procedures leave us doubting the validity of its acts, Ripple's relationships with institutions and central bankers provide some security nonetheless. Despite its claims of protecting individual investors, the SEC has a history of ignoring serious collusions in the crypto field. They have proved their inconsistency and lack of true care for the retail market through their meetings with SPF approval of Prometheum and many other catalysts. This current judgment has done nothing but hurt the parties concerned and provide zero guidance to the market. The method taken by the SEC leaves much to be desired in terms of clarity. In conclusion, the LBRY case verdict does not provide much solace or security for market investors. At this point, all eyes are on Judge Torres to make a ruling on the XRP secondary market issue. We anticipate a favorable ruling from Judge Torres and note the SEC's failure to present evidence of individual investment contracts and the removal of their expert opinion as significant vulnerabilities in their case against Ripple. Nonetheless, the SEC's lack of openness and other problematic practices continue to erode public trust in the agency. Keep in mind that these are just my thoughts and opinions, not financial advice. The long-term outlook for Ripples is cloudy, so investors should use caution. Around coin number 67, the SEC has taken action against a number of other coins. Specifically, it should act as a gentle reminder that we are venturing into unfamiliar seas, and that due diligence and forethought are essential. Let's stay alert and hopeful that a solution will be found shortly. This updated script is provided for demonstrative reasons only and not as investing or financial guidance. Based on the information given, below is the next section of the script. Let's delve even deeper into the latest SEC and Coinbase news. Today is marked by a major event that requires our immediate attention. As we've already established, everyone involved in the Ripple vs. SEC lawsuit expected it to end soon. The United States District Court ruled that LBRY Inc. conducted unregistered securities offerings in violation of the Securities Act. LBRY has filed a motion to limit the SEC's remedies, but the SEC is seeking a civil penalty of $111,614 and an injunction prohibiting LBRY from making any further unregistered offerings of crypto asset securities. It begs the question, could this ruling have implications for the Ripple case as well? Because the LBRY paid a little fine yet went under as a result. That the SEC's actions ran counter to their professed mission of safeguarding small investors is made clear by this result. The effects of this decision will be felt far beyond the realm of LBRYs. A day of reckoning appears to be rapidly approaching, with the SEC seemingly intent on eliminating 99% of all cryptocurrencies. Indeed, the SEC's intentions and behavior are cloaked in mystery. Returning to Ripple, it's important to keep in mind that their fight with the SEC is far from finished. The SEC's attitude is inconsistent, and their actions appear to be influenced by their own agenda rather than a genuine desire to protect regular investors, but Ripple has the financial means to continue fighting. It casts doubt on whether or not the American administration follows the rule of law. We can only surmise as to whether or not the judge's failure to rule on secondary sales of LBRY tokens will have similar implications in the Ripple case. Whether or not a judge rules that XRP is a security and how the question of secondary market sales plays out will greatly affect the case's result. The judge's decision to disregard the SEC's expert testimony about the motivations of XRP buyers could be seen as a weakness in the SEC's case. While the market remains unsure until a decision is announced, it is vital to note that the SEC's actions have been negative. For example, the value of LBRY tokens has dropped drastically, by around 90%. This shows how the SEC's involvement can have devastating effects. Concerns regarding their ability to bring clarity through judgments in court cases arise because of how often their acts cause more harm than benefit. Concerns about the system's fairness were sparked by the ongoing Ripple case and the SEC's overreach. The SEC appears to be making up regulations as they go along, seemingly out of whole cloth. The rule of law and public trust in the American government are suffering as a result of this inconsistency. The SEC's abuse of power and seeming indifference to its consequences for individuals and businesses is disturbing. There have been some interesting developments involving the SEC and Coinbase, so let's return our attention to them. We saw several things happen today that make us wonder why. Coinbase and its management don't appear to be as open as they've made themselves out to be. Recent news articles have revealed that high-ranking personnel, including CEO Brian Armstrong, have been swiftly selling off large sums of shares and coin. One may reason that if the CEO and other high-ranking executives truly believed in the long-term viability of Coinbase, they would not sell their shares at a time when the company's stock values are rising. Their actions, however, indicate otherwise. Their behavior may be explained by the fact that they are gradually selling off their stock in preparation for a market crash. They can evade the SEC's scrutiny and any legal action by selling their shares gradually. If all their stock were sold right before the market crashed, of course, it would be a red flag that draws unwanted attention. They are able to avoid being caught and increase their revenues by taking this methodical strategy. This tactic brings to mind previous events, such as the one in 2001. When gold bars were stolen and insider trading was practiced, leading to disastrous results, several people were punished. While there are undoubtedly official explanations for the CEO's actions, the situation as a whole raises concerns and requires thorough monitoring. An additional element of mystery is added by the recent report that Brian Armstrong deleted a large number of his earlier tweets. It's important to keep an eye out for any suspicious activity on Coinbase. In spite of the price increase and apparent success, Coinbase may not be as trustworthy as it seems, and its tight ties to institutions like BlackRock raise questions about whether it actually has the interests of individual investors at heart. We must be ready for the coming day of judgment, as it is probable that Coinbase's main goal is to make as much money as possible off of regular investors before the ultimate collapse. Let's refocus on the SEC's behavior now. It's worth mentioning that they have been persistent in their pursuit of a wide variety of coins, allegedly targeting something in the neighborhood of 67 of them. This makes one suspicious of their goals and level of market participation. The SEC's actions have been inconsistent, calling into question their claim that they are protecting individual investors. A reminder of the SEC's power and the repercussions for enterprises embroiled in legal fights is provided by the library case, in which the defendant, despite obtaining a very small punishment, ultimately went bankrupt. This causes one to question whether or not the SEC's procedures and goals are truly dedicated to protecting ordinary investors. In sum, the activities of the SEC and the strange behavior of Coinbase have placed a pall of suspicion over the market. It is essential to exercise caution, perform in-depth research, and keep up of developments in the crypto realm. We may not be able to know what lies ahead, but we can arm ourselves with information and be ready for anything. This content is based on the script you provided and is not intended as investing or financial advice. Before making any financial commitments, it is wise to do one's homework and get expert advice. Be in the know. Maintain vigilance and act in a way that is consistent with your risk tolerance and long-term financial objectives. Before making any financial commitments, it's important to do your research and seek advice from professionals. Please like and subscribe my channel. See you in the next video. Bye.